Right, ledgers. Can everybody hear me? And can you guys see a prime XBT chart? Chart website. Let's get the audio confirmed. Up, up or down? Down, down, up, up. Is it working? Just confirm for me, please. Okay, can you share the video if you can? Retweet it. And let's get going. Okay, so we're back with Prime. So let's get the disclaimers out the way with, and we'll get stuck in. So it's ugh. So welcome back once again for a weekly Bitcoin for Ledgers crypto update. Before we kick off, I just want to give a big shout out to our sponsor, Prime XBT. They were my original sponsor when we first started the weekly live stream, and it's nice to come around full circle moving forward. So you can sign up to them using the link in the video description, and you can get 25% off trading fees if you click the link. As always, nothing discussed or featured today constitutes financial advice. As with all areas of investment, you should always seek the advice of an investment professional before participating or parting with your capital. Anyway, that's out the way with, so just nobody can fuck me over. Joke. Okay, so what's going on? So there's a couple of scenarios. I'm going to start off with the basic chart first, and I'm going to go over the basic plan. One of the plans was, as long as we remain below 60k even charted, then we're probably going to go towards this area here. I thought we'd probably do something like this, and then once we reclaim, trigger, no trigger there. Okay, so it just nuked. Okay, that's that. So what we're doing is we're within this range. So I'm going to simplify this down, make more sense of it. Personally, I prefer Ethereum. Okay, check them out. You'll love your answers. I'm going to do Ethereum. I prefer Ethereum. I'm going to do FBTC first after this. But let's go over what Bitcoin's going to do. So I'm going to go back and clean the chart, and let's just have a top down. We haven't done that in a while. Sorry about the noise. Come on, nephews here. So we've got the yearly. Let's have a look. How far in the yearly are we retracing? It's always good to know. So I'm going to get the low of the year to high of the year. This is just something I do. I'm going to mark out the midpoint for this current year. And this midpoint comes in around about 48,367. So we're going to have a line there. It's just like a marker for me. Do we close above half point of the year or below? I always like to see. Since we're in December, 48,367. Just like the video, please. Just get the YouTube algos going, share it if you can, retweet, just a simple retweet. So just mark, we'll be in a thin line actually, okay, so it doesn't get in the way. And it just so happens we're just sort of consolidating right there, aren't we? More or less using that. And as you can see the reaction, before we even knew that was the midpoint for the year, look at the price action there, okay? Before this, because the moment we knew is the midpoint, once that high was formed, but all this, it's happening before this high. So as we can see, that's a level to keep in mind. Now let's go back. Okay, so I've got that level drawn. Let's go to the quarterly. Wagwan there. Okay, quarterly. Okay, we've taken that out. It's back below previous quarter. Let's mark our previous quarter high. It's important in my opinion. Let's mark that out. We're going to do a thin color, and I'm also going to mark out the quarterly open. Okay. Obviously, we got that. We can draw that in later. And I'm going to do the open in a dashed line. So it's different. Okay, so we remember. Now let's go to the monthly. What is capping the market? Now, if you remember, yes, I'll do F analysis. Just wait. You know what? One thing I can't stand is when you start saying we're going to do Ethereum, then you say, okay, let me do Bitcoin first. And then some low single IQ guy jumps in F analysis. Like, shut up. Oh, God. Some of you, I think, are just rude and you have no manners. Okay, so January's high was a level we spoke about months ago when price was around that level. So we're going to mark that out, okay? January's high here. It was important when it was around here. So when we're dropping and we deviated January's high, we got above it. So we're going to see the price action in the lower time frame and see, how is that important for us, okay? Like seriously, man, as I said at the beginning, I'll do Ethereum. He just jumps in. Okay, the funniest one when Ada, okay, now Ada's fucked. Shut the fuck up. And as you can see, January's high was important because once we got above it, that was a separate range. Okay, once we got below it, it's more or less resistance, close enough, resistance, support. So what we've got is, this was the pullback that sent it up. So this consolidation here, or accumulation, whatever you want to call it, that pushed it up. Okay, and then now we got a retest. Now obviously with crypto you get the deeper exchanges, but look at that, to the tick, where that's held. What else can we work with? Well, I'm going to mark out a January's low as well. Okay, I'm going to mark out a January low. And what we're going to do, we're also going to mark our midpoint, because the midpoint was very pivotal for us. And the midpoint comes in at 34,867. 34,867. 4,867. Okay. Yes, we'll do a few alts. Oh yeah, today we're going to bring on TED Talks. I forgot to mention TED Talks Macro. He'll be talking about, I was on his show earlier this week. No, last week, sorry. I'm out of sync today. And yeah, he's good. He knows FA, so he'll be talking about risk off and risk on, I believe, and maybe he talks about other stuff. But that's the January mid range. So okay, that's dealt with. Go to the daily now, and that's held to the tick. So what do we have to contend with or work with? So what we're going to look for is, okay, what's capping the market? And I believe, okay, I had a blue box drawn. So if you look at the chart I posted on Twitter, let's quickly go get it. I said I'm going to speak about this chart here. So I've just redrawn this chart. Is here. Okay, so we've got this here, same levels, and it's this blue box here. And let's talk about this blue box. Why is it important? Well, the way I do it is, if it's an important level before, I assume it's going to be an important level again until proven otherwise. Okay, that's why, when we do levels, that's how we derive them, don't we? Where's it gone? Shit. Here. So this area here, what's the importance of it or significance of it? And if I'm going to draw it like this, we got this low here, and we got here, and this is, for me, it's important region here. Okay, fuck it, let's just do it here. Here. Why am I keep freezing? I apologize. Can you guys hear me okay? I don't know why I'm lagging for some reason. Am I lagging for you guys? Someone confirm I'm lagging. I'll keep lagging. You go, you funny boy, blood clot. Okay, so there, we've got this there. Okay, now what we've got here is, this was a consolidation, and previously we deviated it. Okay, and then once we got back below, we had resistance there. And so far, the wick, okay, I know it's a daily, but we got back, and it's sort of holding this area here. Okay, so this blue region, once we, okay, after the deviation, once we cleared it for the second time round, it pushed up. Okay, so further confidence to that, and I'm going to keep it very basic. Sometimes the very most basic TA works. Okay, the context is set for me. The context sets for me and says, okay, above here, we've got like this sort of range to work with. Okay, and what is that level? That level is previous quarter high. So we're trapped now. So, and you see, a previous quarter high was SR here. Okay, so what we're stuck with is this quarterly high there, and January's high, and more or less in the middle. Okay, lines in just above the middle. Okay, lines in 50% for the year. Okay, so yeah, after my stream, all your favorite influencers will be updating your chart, so don't worry about that. And they'll be using halfway of the year as well. Don't worry about that. So if you don't get this, maybe your influencer can reword it in a different way. So we've got that high there. We rejoin it to that, and that's just a basic trend line, isn't it? Okay. So what I'll be looking for, I mean, usually I don't like to see the wick. Okay, I like to see some sort of, see this here. If you get pricing like this, it does that, and then it phases off, consolidates, forms an area of accumulation, and then break out of that. So what I would like to see, I think Bitcoin consolidates for a while. And I'm going to explain my reasoning why behind that based on FBTC. Okay? For FBTC to blast off, and I believe we will. If I'm wrong, we'll have got clear validation, so who cares? I'll flip. But I think if you can maintain this region here, why? Because this was a region before. And then later on, maybe in the new year, I don't know, this could take weeks. How long did this take? Let's go back. That was in May until about August time, wasn't it? A couple of months. So something like that here. So I mean, I'll mark out a range place for this, okay? But that's the best I can think of for this play. So I mean, I'm just gonna be basic. The more it's gonna be Ethereum is gonna be easier. So if I'm thinking this is gonna be range bound, then why not just go with the strength or whatever's trending? Even if there's trend to the downside, I'd rather take the Ethereum to the downside. Something that's trending up or down, I don't give a fuck. So, anyways, what we've got here is, okay, that's a deviation area. So if you look previously, this area acts as a deviation. So we've got the midpoint for the year, and once it deviates, you got back below, that's resistance. So if I'm going to play level to level, okay, either it comes back below here, and so what we've got here is capping the market. It's a little range now. So before I continue, is everybody clear? Is it making sense to everybody what I'm saying? But this shit, I don't think I've gone over stuff like this before, how to approach a market differently. So what we've got here is we've got this level, capping the downside. We've got a range here, don't we? And we've got we can argue like a range high here as well. Okay? So if I'm going to play level to level ranges, scenario 1 is going to be, well, if it punches through that level, then gets back below it, the natural magnet for price is going to be the midpoint for the year. I look for a level to level. Like before, let me make this clear. Personally, I prefer Ethereum. I'm going to do this anyway. Okay, why? Because we can use this confluence. Even if this goes higher, for FBTC to go higher, and I'm going to give my reasons why, then this has to go up slower, doesn't it? And USD has to go up harder. Well, that could be a level to level play. Target 1, and that's the consolidation initiative move, and target 2 done. Okay, now if I don't like that setup, or if I got out there and if it's going to break down lower, well, where's going to be my objective? Well, let's go in more conservative areas and say, I know I've got too many boxes going on here, but just there. Okay, the breakout play, say I wasn't comfortable for whatever reason, I've lost my range low, haven't I? There's my range low, my range high. Then that's going to be clean breakdown. That's a break out of this range, break below the trend line, trigger, target, and then possibly a target towards this trend line, and there's extended targets, okay, in case we're gonna, do this formation, a consolidation phase I just mentioned. But that's level to level, and that's it. I don't give a bias. It's been set in the sense where I've got my ranges, higher time frame. Now I know where I'm navigating within. That this is the fact. Furthermore, what would be the upside target? Well, the upside target, let's go with the target in mind and say, I'm going to be a bit more conservative, go for the spike low. Secondary targets would be this low. So let's set our targets. Let's draw our targets in. That's first target. Logical area, because that'll bounce, right? And then, we'll go for this range low here. Okay? So, I'm going to just draw them in, because it's pissing me off that I keep drawing it and deleting it. My own fucking fault. What a retard. No offense to retards. Okay. There. So, the other play would be trend continuation. For the breakout play would be, okay, breakout. Ideally, I want to see a push back down, because normally you can get stop run there, chop everybody, get back down. And then this time around, if it reclaims and holds above after the stop run, that's what you normally get. Look at the breakout, that's what you normally get. And then that is my long. Target 1. And then target 2 would be there. If it comes into here, starts finding resistance, I exit. So at other times, I take them. And you'll see me say, that's why I always say it now. Because some idiot will say, well, that's you said target there. Well, I've also said if it comes into the first area and finds resistance, I'm going to fucking cut it, aren't I? But for some reason, your single digit IQ doesn't allow you to think beyond, 5-word sentences. Okay? It's not your fault. It's the way you're born. But this is not for you. If you're a type that can't think beyond 5 words, Anyways, so that's that. And if it then reclaims and holds, maybe trade my stop losses, but I can always get back in. If it reclaims above there, then that would be the secondary target. But here, if it starts finding resistance and coming down, okay, then that's that. Everybody clear with that? So I am approaching it from a level to level perspective. Now, at what point do I believe it's going to go a lot higher? Okay, well, if you think about it from a bigger picture point of view, okay, what we've got here is, we got this high here. That was the initial level I was looking at, okay? And we've got previous all-time high that comes at 65k. I'm gonna go with the, I could mark out that high there, but I'd rather go with the more conservative high. And we're gonna go with that high there. So I'm going very, very slow. Okay, even your missus that's watching this right now is understanding this. Okay, so what I would do is, okay, so that region is covered now for level to level plays. Oh yes, the other region would obviously be, well done, you can do 6 words, well done. So if it did come out to the extreme end, took out the low and then reclaim back above here, then that's a long back towards there. Okay, don't worry, we're going to pump POI on stream, don't worry. Just for now, let me do this. And that's the other level to level play, extreme end. Okay, so I've covered how to play this range, how to play this range. Ultimately, ideally, you know, when you get a reclaim, okay, if you reclaim back above here, and then that would be a deviation of this area here, which would mean target 1. At that point, target 1 maybe range a bit more, but ultimately I'm looking for here. There's gonna be, the stops are gonna be resting here. Okay, I played there. If it blasts off towards there, so target 1, target 2. But even if I play it as a range level, okay, what I would do is play it like this. So remember this, okay, region here. So this would be, so what I'm doing, I'm approaching a trend just by level to level. Your missus wants a pump. Okay, I'll deal with it later on today. Don't worry about that. Okay, from there towards there. And then obviously something like a trend line there. If it breaks above and holds, then that's your long play towards there. Now, one play could evolve into something big, but say if it finds a resistance there and starts turning, the reason why I mark out these separate ranges is because I'm trying to show how to get back in. There's no need to hold then, is there? Because if you reclaim a level, then you can always get back in, can't you? You're still maintaining that trending move. Is that making sense? Now, obviously, if I enter here and it just one time goes into here, happy days. But if it ultimately, I'd be targeting here at this point. A reclaim above here would be a big thing for me, in my opinion. And I think we go to here personally. But that is the case. Till then, these two are the main ranges I'm ping pong to within. And that's that. And that's all I have for Bitcoin. Is that clear? How old is your missus? And what is she out of 10? Is she at least a 9 out of 10? Then we can talk. Okay. So, why is somebody messaging me? I can't have kids, can you help me? What the fuck? Mods, if you see that, kick them out. Okay, so that's that done. And that's it. Okay. Let's move on to ETH-BTC now. First, and then I'll do ETH-USD. So ETH-BTC, I think it looks clear to me. I'm not sure the confusion. But yes. ETH-BTC. Here. So I've already got my trigger for ETH-BTC. And this is in the last stream. Okay, so if you look at the last stream, I spoke about this. Okay, we got a retest of that high there. Mid-range. It's holding above now, isn't it? So what we've got is, I believe, I'm in the swing trade and I will cut it on the clean break below here. The blue box, I'm targeting towards here. Okay, so I spoke before, range high 2017, range low 2017, mid-range. The mid-range is pivotal because he here hits it. Once it clears it, it pushes towards there, doesn't it? First target was this, hence why that's my first target. You can see the consolidation here. Once it cleared this level, it sells off. You can see it's a pivotal area. Okay, here and then this time here. So this is why, if this is trending up, then I'd rather like ETH-USD personally. Okay, and until proven otherwise, I think ETH-USD outperforms. Till proven otherwise. So we played the initial trade, if you remember, level to level towards there. If you find resistance, get out. Okay. And then I said, okay, if it's gonna go higher, I want to see a range within these two. It didn't range that long. Market current rate, but it's broken out, and this is enough for me as a trigger. Cut it below here, in my opinion. Target 1, target 2. I'm already in this from here. Okay, the breakup play. I played the initial play from there. I'm already here from the retest. I will cut it on a clean break below here, and I got targets there. Okay, the worst case scenario is if they fuck me over like this, I then send it back up. Well, I'll take the loss. I'll get back in then and do it again. Okay, that's that. Is that straightforward? That's all you need for this. Basic pattern breakout above the mid-range. MDI range. Okay, gotta fix this. I have to fix this, otherwise my OCD kicks in. How the fuck did I not notice that? Why did nobody tell me? mid range there. Okay, how do you trade FBTC? You just trade it. That's how you do it. Okay, well, there's some exchanges that offer FBTC, so you can find them. So that's the it's F long Bitcoin short, or I just trade the FBTC pair. You can find some exchanges, they do offer it. Okay, check out Prime. Why not check out Prime? You'll see. Okay, that's that done. Everybody clear with that? And that's it. So that is setting me. This is telling me that F is the better play. Okay, MILF range, absolutely yes. So that is it. Now let's go on to something really simple for ETHUSD. Okay. Now, firstly, I spoke about this here. If you remember, do you remember from the previous streams? When I was doing ETHUSD, I said, what's the key pivotal area? This region here. If you remember, why that region there? Because this was the further, distribution. Once it broke below, retest, big sell-off. Deviation, retest, sell-off. Breakout, hold, buying. So if this was a 5-minute chart, this is the region we look for the buying, aren't we? That's exactly where I look to buy. And I even mentioned, it wasn't probably last stream, but because I've been through like 10 times because it was around here, this was the untested consolidation right to that region, perfectly into there, sniped along there at the invalidation below here. It pushed up. Okay. Now a lot of things mark up with this. Now this at the same time with FBTC came into support as well. So a simplistic way of looking at this, maybe I did have a clean FUSD chart. Here it is. Here, here's that chart I went through last week, and here's the level. The previous streams I've got this in, and it's pushed up. Now it's reclaimed above here, perfectly retested this. I've even posted on my Twitter. Now I'm going to go over an easy way of looking at this, okay? One way is, sometimes the simple shit really does work, doesn't it? I'll actually get, fuck off. Get this. Okay? See this there? No, 1 second, my bad. Let me get a clean chart out. I'm going to find a chart that is absolutely clean. Oh, God. This is going to be a mission of finding one, isn't it? Got this here. Yeah, I can fuck this off. Okay. Yeah. So we get this basic trendline concept like this. Okay. I'm also going to get this. Why am I doing this? I'm doing this to find the deviation areas. That's all it is. Okay. Deviation areas. So I've already explained from the horizontal point of view. We've got this here. No. We've got this here, and I'm marking it in a blue box, okay? This region here. Okay, there. So, there's 435 of you here, and you can't even get me to 200 likes. Okay, now. It's disappointing. Joke. Okay, so the first region is, okay, I tweeted the chart and I said, okay, what I wanted to personally see was a retest of this. So what we got here is a deviation of this trend line. So that usually tells me when it spikes like that and reclaims, then it's a good sign. So what I wanted to see was, I already loaded some here. I had a limit order in because I always said how I'm going to have sting bids in, if you recall, at this region here, because it's my clear line in the sand, isn't it? I got a clear line in the sand, so I know exactly where I'm wrong. Now, the other way is, okay, and it's not just one way of getting on board, there's going to be many opportunities, okay, reclaimed deviation. So what I wanted to see was ideally is if we could just retest this a bit once more and push higher. It looks like it's not doing it, okay. So if not already on board, okay, as it stands now, I mean, that still remains my invalidation, or from a swing perspective, okay. I'm not going to change my swing stops. I have taken some off the table, obviously, after this move. But I really want to load back in. I'm in FBTC anyway. How do I get on board? Well, where are we dealing within? Where are we back within? Well, really and truly, we are within here now, aren't we? So you see this here? That's range low. And our range high is here. Okay? So this is our area now to deal with it. Okay? So scenario one is, I mean, if it can give us like maybe one more swing low and get back above, I will take that long. I will cut it on a clean break below here, and I'll play that. Okay, maybe first target here as that's the base, and secondary targets there. Okay, that's scenario one. Scenario 2 is, okay, add in the levels again. I'm gonna do this fresh here. Okay, what do we have to work with within here? So, alright, what do we do here? You are so focused on the swing plays. I haven't even looked at the lower time frame charts, to be honest. So we've got this high here. That's acting as a range high. I'm gonna go with this level here. I like this region here. See that low there? Bit of a pivotal area, isn't it? Support, bit of a deviate mean area. So if we can possibly do this, get back below, retest, okay, and then hold back. Then I'm gonna take the long there. I'm gonna cut it clean break below here, and I'm gonna target 1 there, and then target 2 there. Okay, so furthermore, where would be my extended targets if it really is gonna break out? I'm gonna take that high. I'm gonna take that low. I'm gonna mark out 52. I think 51.35. I've got fib extension from other places, so 51.35 I've got drawn out. I mentioned that before. 51.35 was the first target area. Okay, and then after that, we've got the 127.2, 161.8. That's usually a big one, and then usually there's a big retracement after that, and then the 200%. Okay. Am I in any trade actually? What does it matter if I'm in a trade or not? If you were listening to me, you wouldn't be asking that. But you're not listening, are you? So that's that done. Now the other way of doing it is, well, let's see if we can get above previous all-time high. So previous all-time high is here. Is some of you even listen, or are you just like fucking just chatting for the sake of it? I have a zero tolerance policy, yes. I know, just, you know what it is, when I get idiots on the stream that don't fucking listen. Why should I answer if you're not listening, right? So, that is previous all-time high, resistance, support, resistance, deviation, support there. So we know it's a decent area. So what I would do is, okay, maybe it gives that trigger, hits target 1. If it then pulls back, okay, this would be an entry based on trend continuation. And if it gets back above again, okay, then that's my long. And I'll play obviously towards the trend line high, maybe a little bit of pullback, and then towards there. Does that make sense? I've mentioned it's a fib extension level from previous range. It's a range level. And then obviously we've got those targets from there, from that high toward that low. So this, and then the breakup place. If FBTC is going to really go up, okay, it's going to be, this is going to really break out then, isn't it? Make sense? At what point do I think we're fucked? Well, we got to be prepared for that as well, just in case we are fucked, okay? I'll talk over the Bitcoin fuckery scenario. Let me quickly go over the Bitcoin fuckery scenario. Is if Bitcoin was to do something like this, let me save this chart. If Bitcoin was to get back below here, okay, so if I mark this out, in case I forgot to mention it, you never know. It's basically the lies there trend line. If it got back below here, I start to break down, then that's a shorting opportunity. Target 1. If they're really gonna fuck the market, target 2. But that would be my main area. So maybe a bounce, and then if it was to really get back below that again, that's a short from there towards here, just in case. Okay, it happens, we have to be prepared. I'm always prepared for the worst case scenarios. ETHUSD as well, worst case scenario. Okay, so if it breaks out of this region here, what would be the objectives? Well, I would say probably towards here, right? This region here, these highs there, so those highs there. So if it was to break back below here, well, that's where re-enter this range then, and that would be target 1. If they're really gonna swipe the market, and I've seen it before, I mean it happened here, right? This kind of big drop here, then if it happens, it happens. Think both of them, okay? So what if it goes down? Play the short. Well, I don't know why people cry like a bitch. Play the short scenario. Who cares? Target, maybe bounce, and if it got back below here, that means towards the, and then I think this will be the big long up. But yeah, just in case, I gotta work. I'm just playing. It doesn't matter to me, up or down. I know my levels. I know my ranges. I know where I'm looking to get on board. And I know where I'm targeting. Who cares if it's up or down? The only time you care if it's up or down if you're a hodler and you can't trade. And if you can't trade, this isn't for you. Sorry. Stick to some spot play streams that go over long only and up only. Gotta be realistic here. Okay, that's that done. I'll cover AVAX since I've been doing that. AVAX basically, I'm long from our average price 82. I did sell again about 80 to 85. So basically, SR flip. Okay, I think this is gonna go to a new high unless the blue box breaks. I'm very bullish this, and I've marked all the targets already. Though the targets I mentioned before are different style. If that's the low, then obviously short term level to level trade is there. But I believe 165, 190, 200 plus. I'm cutting it, and I've got my invalidation at 60. Okay, and that is that. I personally think we get new highs until proven otherwise. Let's have a quick gander at AVAX BTC. Looking decent as well. Let's look at this pair. We've come off of this area here, so this was the initial high. So we've got this region here. It's the SR flip. So similar with this is where I draw a trend line to fit my narrative, by the way. Similar to FUSD, it's retested this key support area, right? So here was a key flipping point. This was the distribution retest. So everything's lining up. As long as we don't make a clean break below here and AVAX holds above 60, should be good. 80 should hold in my opinion, but 60 is my validation. I think new highs to prove otherwise. This support becomes resistance, resistance becomes support, whatever. Okay, everybody clear with that? You want to do PYR? Yes, let's do PYR then. Since I've been on about that a lot, let's do it. So what we've got here is just like any coin, every coin you look at has taken big dumps. So I don't know why you focus on one thing. If it's going to do massive astronomical gains, it's going to do big drops as well. But the key point for me now is this range here. So once we've, this was the big accumulation area that kept the market. So this is my line in the sand area. So now the one is if it does make one more new lower like this and then gets back above, and that would be a great long in my opinion, clear invalidation. For now, my invalidation would be a clean break below here. Okay, so this is just a retest. Forget look at the numbers. This is how crypto works. You make 100x gains, but obviously the drops are relative to the rallies. So I'm not sure what the worry is, or there should be no worry if you're taking profit along the way. Yeah, when I mention these setups, I always mark our profit levels. So you don't think we got issues. Anyways, so that's that. Now, what would be okay? Confirm the low. So one is obviously, and if you haven't bought here, then I can't do fuck all about it. The other way would be a reclaim of our previous range. So if we look at it from this perspective, we've got this here, okay, this area here, right? This pre-box here. So say this is accumulation area, okay. So we've got range low, and let's call this our range high, previous old range high. Okay, so what we're dealing with in is here, and then we got here. Okay, so if you want to play level to level, I got to bring Ted on after this. So I'm happy with something like this. Okay, if you're not in board here, you want to play level to level. Okay, this why it's easier when you got the futures. This is just a spot, but I'm holding my spot plays. But I've reloaded a lot anyway. I would say it's a nice little trend line break. Okay. I don't mind getting a bit higher. I mean, if you got enough capital, you don't mind either. Level to level from there. Trendline break, reclaim of a range low, and play it back towards there. And then at that point, okay, now obviously with different exchanges, it varies. I'm going to go with that high to this low. After that, we got the 57 breakout play. So the breakout play would then be, okay, clear break and hold above. Invalidation if it gets back below the range high. Target 1, 57, 67, 79. And that is that. Okay, if he gets back below, he starts making a clean break below around 17, then probably fucked. That's crypto for you. Done. Move on. Take the hit. Next trade. Just know when to cut it. And don't risk what you can't lose. Simple as that. If you're over risking, that's on you. Okay, and that's it. Okay, I'm gonna bring Ted on now. So Teddy boy. So everybody clear with the plan? Is it making sense? ZCX. Yes, I'm in ZCX. I've already gone over ZCX. Okay. I told you. ZCX. Nope. I went over ZCX. Here. So ZCX. I started loading here first. Is it around here?
SZ. Hey, mate.
1 second. And then I pumped, and then I said I'll DCA in towards here. I'm going for 10.
Have you got me there?
Targets, as long as we hold blue box. Okay, can everybody hear? Hang on. Hello, Ted. How are you?
Hey, mate. Good. How are you?
I'm okay. I think your voice is a bit low. Is your mic volume up a bit? Can everybody hear Ted?
Can you guys hear me?
I'm hearing you really low on this. Let me see. Let's see, guys. Is it clear? Hang on. Let's see with the audience because
Testing 1 2. Testing 1 2.
I'll make you presenter as well. Okay. Yeah, they can hear you, and as long as they can hear you, it's all good. So
Cool.
I've given you the.
I'll share my screen here.
Excellent. There we go.
Cool.
So everybody,
Got
this
my
is
screen
Ted. His handle's in our Twitter page.
G'day, guys.
And he's going to do a presentation on risk on, risk off, and whatever he wants to do. So if you want to give a bit of an introduction about yourself, and fire away.
Yeah, so I'm Ted. Ted Talks Macro on Twitter. So if you can see my screen there, I'm going to go through this tweet actually. So if you go through my pinned tweet, you can follow along. But essentially 8 years in traditional finance on the side kind of thing, trading Forex, trading commodities, and doing my ask for the most part. Learned a whole heap about how markets are intercorrelated and now applying that to crypto. So I'm finding that there's a lot of things that you can take from the traditional landscape and apply to crypto. And that's essentially what I talk about on my YouTube channel and talk about on my Twitter page as well. So if you guys can see my screen there, I will just go through the concept of risk appetite and how you can essentially identify when traditional markets are starting to up their risk appetite or they're starting to risk off and trim that risk appetite a little bit lower. So this is my watch list here. So if you look at my trading view screen now, you're looking at the Aussie yen and Bitcoin, and it's actually quite a good time to speak about this because you're seeing the Aussie yen start to bounce, and that indicates some risk on, and you're seeing Bitcoin start to bounce as well. And, I spoke about at the open on Monday. So if I just have a look at my profile here, so the thing was on the weekend, so obviously traditional markets aren't open over the weekend. So that leaves a little bit of a risk and people on edge in the traditional world. But Bitcoin, we're trading 24/7. It goes over the weekend, and we can see what's happening in the market over the weekend 24/7. But traditional markets, it's the opposite thing. Markets open for a certain period throughout the week. So Monday to Friday, Forex is open longer than equity markets. So equity markets are only open per trading session, but Forex markets are open Monday to Friday, and they have that very defined period of when they are open to trade. So you only know what's happening in those markets when the market is open, right? But crypto, we see it 24/7. So that gap over the weekend leaves a few risks. It leaves, unscheduled news. It leaves, the global economy could take a shit over the weekend, and then we see traditional markets really fearful on that Monday open. And that's what we're kind of seeing at the moment. We're seeing COVID, it's very unknown with this new strain. We're seeing the Federal Reserve starts to talk about tapering and their monetary support, pulling back on that monetary support that they've been giving us since COVID broke out earlier in 2020. So there's risks over the weekend that those traditional markets get a little bit spooked. And then on Monday, they can open lower than what they closed on Friday. And that's called a gap down. And that leads to a risk off environment. And we'll go through risk on, risk off in a minute. But talking about this Monday, the risk was that COVID escalated and we had a gap down in traditional markets, which could inevitably send risk off across the markets and Bitcoin move lower. But what you saw was the Aussie yen, it gapped up actually. And that led to equities gapping up as well. So the currency market opens an hour before the equity futures. And that's how I was kind of able to spot that, Aussie yen gapped up and equity should follow an hour later on that open on Monday. But anyway, we'll get to that a little bit later and explain how Bitcoin and all these markets are correlated. But to understand risk appetite, firstly, what is it? What is risk on? What is risk off? What is the risk dynamic? So essentially when investors or traders refer to risk, the risk dynamic they're referring to is the market risk on or risk off at any particular time. So I've written this thread. You can follow it along. It's my pinned tweet on Twitter. And you can actually get the watch list and save it to your trading view. So what is risk on? The phrase indicates that the market is in an environment where sentiment is positive about the global economy, and therefore market participants are putting on more risk. So they're happy to spend their money, they're happy to allocate more capital in the venture of making more money. Conversely, risk off is the opposite of risk on, obviously, and occurs when market participants have a lower appetite for riskier assets, fearful of global events, and they want to preserve their capital for whatever reason. That could be, what we've seen recently with the pandemic. It could be due to central bank monetary policy changing, a whole wider range of reasons. So understanding when the market is risk off can help you manage your exposure and conserve capital when things are getting dicey. So it's all well and good when the markets are moving higher, Bitcoin's pumping, altcoins are pumping, but identifying when that is going to shift, like we've seen recently, is absolutely key to conserving your capital, because it's quite easy if you're a hodler. I know what you talk about, SZ, is quite trader based, and there's a lot more management involved with that. But if you're a hodler, you can identify these macro trends to understand when that environment is shifting and perhaps take a little bit of risk off the table. So identifying when specific assets in the traditional markets are going to move higher or lower based on technical analysis, news, etc., it can tell you a lot about what investors are thinking at that time. So chart number 1 is the Aussie yen. So this is the Aussie yen currency pairing, and those that have traded Forex and been in traditional markets will be quite familiar with this. But for those that aren't, it's just comparing the strength of the Australian dollar against the Japanese yen. So 2 different currencies. And as we know, different countries around the world have different exports, that they have different ways that they have contributors to the GDP. So with Australia, a large export economy, so we're exporting copper, raw materials all over the world, and that's how we earn our money, and that's a large contributor to our gross domestic product. So with that, the sensitivity of our currency to growth, to global events, is very, very heightened. So with that, the risk dynamic in the market is very much shifted to a risk-on dynamic for the Australian dollar to appreciate. So we want to have positive global growth, we want to have everything going well, and the market's looking bright and daisy. Conversely, the Japanese yen is more of a traditional safe haven currency, so it performs well in a risk-off environment. And when a risk-off environment indicates that perhaps investors are flocking to those safe haven assets to conserve their capital, that's when the Japanese yen starts to gain a bid and starts to be supported. So this currency pairing is very, very powerful to understand the risk dynamic in the market. So if the Australian dollar is strong, the global economy is strong typically. And there's a few other currencies that show that same dynamic, which I can go over in a sec. But the Australian dollar, very, very risk sensitive and fluctuates, depending on that sentiment at the time. And the Japanese yen, if that gains a bit, it indicates that investors are a little bit more sensitive and conserving their capital at the time. Now, overlaying this with Bitcoin, you can see the Australian dollar, Japanese yen on the left here, and Bitcoin US dollar on the right. So you can actually see that this recent move, the Aussie yen really sold off, and that indicated risk off in the market. So up here, we had that top, and it moved lower quite sharply. But Bitcoin was a little bit more resilient, at this time here. So that was when the Aussie yen started to really sell off. Sorry, back here. The Aussie yen started to really sell off, but Bitcoin still had that move. But sure enough, it dumped hard as the Aussie yen fell as well. And I'll show how the Aussie yen is correlated with equities, it's correlated with the bond market, correlated with oil, gold, everything's intercorrelated. So it's really important to, if you want to be an informed market participant in the crypto space, to understand what's happening in the traditional market space. Otherwise, you're just looking at technical analysis and you really can be flying blind. And I know you said you typically overlay some charts from the traditional world. Oil and Euro AUD is another one that I know you look at.
I like to use the
helps
oil
you.
and the Cadian correlations. They work really well.
Yeah, it's all for confluence, isn't it?
Yeah, it's not just
it's many
confluence. It's
things
just
that
a
you can
factor
get
of
lined up.
confluence. Yeah.
Yeah, and give you that conviction. So when you can see these things lining up, so say, Bitcoin comes into a solid level of support and you've got the Aussie yen, going bid or being supported, you can be pretty confident that the Bitcoin is perhaps going to see some support. And going back to my thread here, so that's the Aussie yen. That is just one of these that you can use for that confluence. And then if we overlay it, so you can see on the more macro scale, back when COVID hit, there's a log chart on Bitcoin on the bottom here. You can see that risk off indicated via the Aussie yen in about March 2020. We got that big sell off, and Bitcoin again, it lagged a little bit, but it caught up and dumped in a big way, obviously. And then the Aussie yen bottomed and we had that big move up, and then risk off again in September, and then risk on with that bounce, and then the same thing throughout 2021. It's all about identifying, you can use these intraday, but it's more about identifying that macro trend and identifying when the macro environment is starting to turn more to conserving capital or to putting on more risk. So that's what I'm trying to identify here. And you can see recently in, the back end of October, November, we had that risk off dynamic hit the Aussie yen again, and Bitcoin, it lagged a little bit, but now it's moving lower as well. So that's the Aussie yen.
So you can use that with ES.
The second one,
Just quick, so sorry to pause you. Like the
ES.
ES.
Yeah. So the ES. Yeah. So if you look at the ES right now, so the ES being the S&P 500, you can see that it's the Aussie yen typically is a little bit more volatile and moves with a higher beta.
Yeah.
But it tends to lead, I think. So you can see even back here, it was giving signs. So so if I draw a vertical line to where's my vertical line? So here, so that's where the Aussie yen sold off. And then if we marry that up with where the ES started to sell off, so that was where, comparing the two, the Aussie yen led the ES. The ES still had a little bit of a move higher, but identifying that the Aussie yen was selling off was a bit of a red flag, and you can start at that point to conserve some capital.
I love those divergences.
Start to think about the next move. Yeah. So I find the Aussie yen, I played around with these risk off, risk on pairings for a long time, a couple of years, and tried to identify, which ones were more significant than others. And I found the Aussie yen to be a pretty damn good, what stands out from the bunch, and that's the most reliable one for me. Other people might see something different, but yeah, that's what I see. And maybe I'm Australian, so maybe I've got a bit of a bias there. So the second chart is obviously the S&P 500. So like we saw there, the Aussie yen and the S&P 500 are quite correlated. And as we spoke about, Bitcoin is extremely correlated with that risk on, risk off dynamic. So you can see exactly the same thing. ES, obviously risk off through the COVID breakout, and then along the way, different periods of shifting from risk on to risk off. So essentially it's what I've spoke about with the Aussie yen, but just on a different chart, a different asset, and understanding how the Aussie yen, Bitcoin, and the ES are correlated, you can identify it. So if I look on TradingView right now, and we'll go to the ES. So you got the ES there. You can see here, as the Aussie yen grabs a bid, the ES is starting to be supported as well. And identifying that correlation, that relationship, you can often see that one of these will lead. In this case, it was the Australian dollar, Japanese yen, and in the second, and then the S&P 500 moves after the Aussie yen moves. But there can also be cases where the ES moves and then the Aussie yen lags. So it's all about just monitoring this watch list here for me. Excuse me, I'll just grab a drink. So monitoring this watch list and seeing how they all move together. And typically you'll get one asset that leads the others. So on this move lower, it was the Aussie yen that led
Quick question.
Everything else.
Can there be scenarios where it sells off, but it's not due to risk off? maybe some profit taking, maybe, you know.
Yeah.
How do you handle
Yep.
that?
So
Interpret that, the differences.
Yep. So I guess the thing that drives currencies mostly is central bank policy.
Yes.
So in the case that we get, so this week coming up, we've got the RBA meeting. So the Royal Bank of Australia are meeting to deliver their monetary policy statement for December. And depending on the outcome of that, that's going to be a very isolated event that's typical only to the Australian dollar. So you'll see those Australian dollar pairs move, but you won't see really any other shifting in the currency space unless there's a massive
Quick question,
shock
right? Did you ever
decision.
notice when there used to be the RBA statement, gold used to start ticking higher first? Like these guys knew what was happening. Did you ever notice that? I remember years
You
back,
see
right?
that?
I
You
used
see
to
that
see
with
the
the
gold tick up
FOMC as
higher
well.
and then automatically buy before the rate announcement, the Aussie dollar.
Yep.
Such fucking insider
funny,
trading.
isn't it?
It's amazing.
Markets aren't manipulated.
That was the
they say.
freest amount of money I ever made. Like, 100%
Yeah.
guaranteed. Yeah. Anyway,
And that's the other
sidetrack
thing.
there.
Like with these events, like when you see these macro events, say, you know, you can identify just by watching the news. If you get news early, say, a good example back in, I think it was 2020, was when Donald Trump actually, you know, he directed a missile at Iran. And there was a big, you know, we were thinking about World War III, and I spoke about this with Mia Khosravi, who's been on your show before.
Yeah.
And, you know, as soon as we saw that, it was just risk off across the board. You know, you had gold go super bid, you had the Aussie yen sell off, you had equities sell off. So it was a very easy trade. So when you can identify these things that are just so obvious, it's just manage your risk and, yeah, just have that conviction and go with risk on or risk off, whatever the theme is at the time. So I'll just get the S&P 500 over on the left here, and then we'll look at Bitcoin on the right just to see that correlation. So you can see S&P's, you know, had a much better day than what Bitcoin has, but you can see how when the S&P 500 has a bid or is supported, Bitcoin sees some relief. And it's quite interesting today that we haven't seen a larger reaction from Bitcoin. But I think, like you were saying earlier with the BTC chart, Bitcoin's probably going to consolidate for a while and altcoins should outperform, I think. But, you know, that development with the S&P 500 bouncing and risk on Monday is quite promising for the crypto market, I think.
Yeah. Also, I think where Aussie yen is at
yeah.
on the daily, I think that's near the bottom. Maybe one more spike because of the news. I don't know. I used to love fading the rate announcement. I don't know. There used to be a period where I used to fade it, but I think Aussie yen is. If you look at the daily, the squeeze is crunching up a bit. I think that's a key support area here. Maybe a bit lower. Maybe there's some spike on the news event, but I think that's a low in nearly. Close enough. Yeah, this region.
That whole zone, really, isn't it?
I'm looking for new highs on that personally.
Deviation.
Yes.
What's that? Deviation. Well, we might deviate. So that's the Aussie yen. What else have we covered? We covered the S&P 500. So again, if I scroll out, you can see the S&P 500 on top and the Bitcoin on the bottom, and you can see just how correlated they are. And, you know, they're not going to move exactly together. It's more about picking if one is leading the other. And that's when you can identify that perhaps you need to start thinking about trimming profits or getting back in long, or just identifying that investors are shifting their sentiment. So the third one is the S&P 500 Volatility Index. So what does this show? This shows the volatility of the equity markets, so the top 500 US based companies, the volatility of how those markets are going to move. So typically in times of high volatility, you see sell-offs, and in times of low volatility, you'll just see natural contango and the markets move higher. So that's how I kind of look at volatility. You want the markets to be, you know, the stairs on the way up and the slow grind up. And the opposite is the markets get very fearful and they take the elevator down. So that's kind of a bit of a funny saying that markets, you know, around in markets. Anyway, so the S&P 500 Volatility Index, it tracks the volatility of the stock market via fluctuations in the S&P 500 index options. So that's what you see here, quite a choppy chart, but identifying when this is going to spike or it might have seen some support. Here we go. So let's look at this one. So you can see it's an inverse correlation to Bitcoin. So on the bottom, we have Bitcoin inverted with that inverse correlation. So when the volatility spikes and moves higher, that indicates risk off. And when it moves lower, that's risk on. So lower volatility, risk on, and higher volatility is risk off. So you can see how these spikes and these sell-offs correlate pretty well with bottoms and tops in Bitcoin. So recently we had a risk off period, so spike higher, and Bitcoin spiked lower. But with this, it's tracking the S&P 500. So it's essentially a similar chart. So whenever the S&P 500 moves lower, the VIX will move higher, and vice versa. So that's that one there. That's the, what did I say, the third chart on my list. So tracking that volatility, you can see clearly when it comes into areas of support, it tends to spike. So just purely monitoring this, all right, we've got a spike, we'll probably sell off. And then with bottoms, we'll probably bounce here. You can identify when the market's going to shift from risk on to risk off. That's quite a good one, I find, because it's got very defined ranges of support and resistance. And that marries well with the Aussie yen. Also, it has quite a strong correlation. So the next one is the bond market. So the US government bonds, the US 10, in periods of fear and turmoil in the markets, investors want to consolidate and conserve their capital. They don't want to be going for those riskier investments like equities, crypto, and all of those ones that yield high returns. They just want to park their money in somewhere safe and maybe earn a little bit of a return on it. But overall, they're just conserving capital. So that's what happens in periods of risk off in the bond market. So you'll see bonds go bid, be supported, move higher in times of turmoil, when investors are parking their money essentially with the US government and just sitting it there. They earn a little bit of a return, but it's safe, it's backed by the government, and they can be pretty happy with just parking it there when the markets aren't looking so great. So that's what you're watching here on the US 10. So all the tickers are in this thread if you have a look on my Twitter page. So this asset performs well in a risk-off environment. The security of government-backed bonds provides a safe haven for investors during times of market turmoil. And I think Miad also spoke about this on your stream, SZ, about the US 10-year. So if we look at, look at the US 10, let's get that. And then we got Bitcoin on there. So the US 10, so obviously when this moves higher, risk off. And when risk off, Bitcoin moves down. So if I invert this now, you'll see the relationship. So look at that. So that inverse relationship, it's pretty damn bang on, right? So you can see the US 10 bottomed, or in this case, we've inverted it, it topped, and the yield would look like this chart. So inverse correlation between yields and the underlying bond. So that's what you see there. Another one that is great to track that shift in market sentiment. So in this case, when it bottomed, so I'll invert it again, so that's the normal chart. When it bottomed, that indicated some risk off in the market. And then Bitcoin followed a little bit later, like with the Aussie yen and with the ES, it lagged a little bit, but it did catch up. Trading with a higher beta, higher volatility, it's really front run that move. But, if the US 10-year can find some support here and start to move higher, you should see Bitcoin supported as well. So that's that one. I hope I'm explaining this well enough, but there's the thread, and I think I'll put a lot of effort into this, so hopefully people can understand it. So looking at the more macro picture, knowing that the US 10-year government bond would move high, it would indicate a risk-off environment. You can understand that Bitcoin is likely to move lower in that scenario, and you see it here on a more macro scale. So inverted relationship, as the US 10-year is supported, Bitcoin moves lower, and you can see that with the arrows there. So the next one. So chart number 5 is crude oil, and this moves with the Aussie yen. It moves all together with those risk sensitive assets. So this performs well in a risk on environment, as you can see. So when it moves lower, risk off. When it moves higher, risk on. And that's what you see there. So if we look at current price action on US oil, so that's inverted. There we go. So it's gaining a bid, and Bitcoin is also gaining a little bit of a bid. So you can see just how correlated these markets are. And I think there's two more charts. What's the other one? So this one's a good one. Gold. So as most people would know, gold is a safe haven asset when the markets are scared, fearful, and looking to save their money, conserve capital. They flock to gold. So if you know Peter Schiff, he loves his gold. I'm not sure why when we're not always in a risk-off environment, but gold is a traditional safe haven asset. And with what we know about the Australian dollar being a risk-sensitive asset, if gold moves up and the Australian dollar is moving down, this chart here should really rip and indicate that we're either in a risk-on or risk-off environment. So if this moves up, risk-on, risk-off, and if it moves down, it's risk-on. So it's showing that relative strength of gold to the Australian dollar. So that's a good one to watch as well. And the final one is probably a really, really good one to indicate the growth of the markets and that dynamic of investor risk appetite is copper gold. So copper moves higher when it's the same with the Australian dollar. So copper and the Australian dollar are actually really, really correlated because Australia is a large exporter of copper. And copper is used in infrastructure projects across the globe. And obviously when there's more infrastructure projects, there's more demand for copper, and that indicates more growth across the global economy. And you'll see copper move higher and indicate that growth in the global economy is quite strong. So with that, risk on, investors are happy, the market is happy with growth, and you'll see copper move higher. And conversely, when we see market turmoil, gold goes bid, and then you'll see gold perform stronger against copper. So that's what you see here, comparing that relative strength of a risk on appreciating asset in copper and then gold that performs well in a risk off environment. So it's about comparing the relative strength of the risk sensitive asset against another risk sensitive asset, and they move in separate ways. So it's a good barometer of that appetite. And that's all I've got for risk appetite. If you want to follow along with that thread, it's my pinned tweet on Twitter. But I think, like we were speaking about before, as said, it's quite good to pair it with your technical analysis, and get that confluence.
Also important.
I've got one more thing that, if we've got time, as said, to just quickly go through. So, totally different topic, but basis markets. So, you're looking at directional plays with what we've just spoken about with SZ and what we just spoke about with risk appetite. But delta neutral really is the way for the crypto space going forward, in my opinion. Not having that directional risk and still collecting a return is what we're trying to focus on at basis markets. So our Twitter page, you've got a whole write-up in our Medium article of the token launch, which is happening on Wednesday the 8th of December, which is this Wednesday. And if you want to learn more about it, go on the Medium article. We're actually doing an airdrop for people that share and like our retweet, our pinned tweet, and it's 1,000 tokens to 1,000 holders. So you're getting about $300,000 worth airdrop to 1,000 wallets. So that'll obviously be split across the wallets, but that's the total pool that will be airdropped. And like I said, basis trading is probably the massive area that can grow in the crypto space. And essentially it's a decentralized liquidity pool owned by holders, and those fees that are generated on that pool will be distributed across holders. So if you want to check that out, go onto Basis Markets and check out the Medium article. But that launch is happening on Wednesday, and like I've just spoke about with the airdrop, you can check that out as well. And there's 5 or 6 YouTube videos. So that's my little plug for Basis, as said, to hijack your stream. But yeah, that's all I've got for you, mate.
Thank you for coming on. I really appreciate this.
No worries, mate. Thanks for having me.
Risk on, risk off. I think a lot of people have been asking. I think you gave a really good breakdown, and hopefully I want to bring you on again soon. So hopefully how the markets are now and how they're updated. So everybody, thank
for sure.
Ted for coming on. Follow him on his Twitter. Okay. It shares good alpha. He knows his FA. I'll do 2 more alts and then I'm gonna end it. So somebody which alt? Luna. Somebody says, so let's go to Luna. Okay. Yeah, give him a follow on Twitter. If you like his stuff, he's got some good stuff. Where's he gone? Let's look for the Luna chart. Sorry about that. Yeah. Luna USDT. Okay. You know what? I was actually looking for a dip in Luna BTC. I took a let me get the Luna BTC chart out first. Luna BTC. It's easy to see. So I was actually looking for Luna BTC at a had a range marked out here. So I thought maybe we'll get something like this. Okay, so it was around there. I thought, okay, maybe if we can get, you know, moving towards. Or was it? No, it was here. My apologies. It was around here. So I get mixed up. I thought maybe we'll get one more dip into there, and then get back up off, and then we took the long. This fucker took straight off. The second setup was, well, that's resistance. So if it can, okay, if it still can do this somehow, that's a miracle. On its own, the way it's moving, and then that, and I'll be taking the long. We'll say if this is the low, and it bounces here, then does that? That'll be first target, and the second target there. As for the USDT pairing, so that if that's the confluence of a USDT pairing, where would I like? I mean, this got bought up straight away, didn't it? This got bought up straight away. So maybe if this is a consolidation, okay. So if you can dip into there and then reclaim, I think that should be the low in and print to new highs. I think this goes to 100. I personally, this makes to 100. There's no market rules, although there's just, you use them all together. I think, in my opinion, I don't think there is one that rules all, but you know, yeah. So if that's the case, or you want more conservative targets, well, take the high and assume that's the low. Okay, like I showed you guys, 127.2, 161.8, and 200% extension. That's the quick view. One more coin. I did ZCX already. HTR. Go on then. Let's do HTR, and then I'll end it here. So HT, actually, that's not a bad region. Actually, I was looking for a buy here. Did I get filled? I think I got filled on this. Yes, I got filled on this. So I'm top of the blue box. I'm in. Let's wait for. I never thought I'd get this because when it was pushing up like this. So yeah, HTR possibly. Yeah, it's hit that. So maybe a range here for a bit. And once it reclaims, that would confirm the low, in my opinion. So if you're more confirmation type of trader, that would be it. And then first target, second target, if you're playing within range. If you're a hodler, then you're gonna do your hodling thing. Then you go to the 2 and then 3.5. But I'm happy. I play level to level. I'll play level to level there and then there. Okay, that's about it for now. I hope you guys enjoyed the video. Share the video. Subscribe to the channel, please. How much am I on? I'm on like under 30k. Let me check my YouTube thing. Let's get. I'm gonna try to get to that 30k. But yeah, check out 28.3k follow. Check out Prime XBT. Use the link in the description if you like what you see. I'll catch you guys next week. Bye bye.